A firm has a current capital structure consisting of P400,000 of 12% annual interest debt and 50,000 shares of common stock. The firm's tax rate is 40% on ordinary income. Of the EBIT is expected to be P200,000. The firm's earnings per share will be.
Right again. 1.82 is a valid answer.
An enterprise was established on December 10, 2022, which brought its assets including land 200, building 150, cash 20, expenses 5 million and labor valued at 20 million KIP. How is the registered capital of the enterprise recorded in the account?
You chose Docker Assets 370 crore, registered capital 370, and it is correct. If the weighting of equity in total capital is 1:3, that of debt is 200:3. The return on equity is 15%, that of debt is 10%, and the corporate tax rate is 32%. What is the weighted average cost of capital?
Well done, 9,533% is the right choice.
The current weighted average cost of capital for Van der Velde is 10%. The company announced a debt offering that raises the WACC to 13%. The most likely conclusion is that for Van der Velde.
Good thinking. The company's debt equity has moved beyond the optimal range is the right answer.
Which of the following types of enterprises in capital formation on the day of registration, the capital is 100% in material, the capital is in money, 70% can be added, the rest is added later? Solid response. Company Limited is a valid choice. The EBIT of Abyss Limited is 800,000. Rate of interest is 10% and tax is 30%. Total capital employed is debt 50,000. Equity 30,000. Calculate EPS. Valid point 2.1 is true. A capital structure theories which suggests that a firm can lower its weighted average cost of capital and increase its market value by the judicious use of financial leverage. Nicely done. Traditional approach is a solid answer. An enterprise that divides its registered capital into equal shares has the right to freely transfer shares through the stock market. What kind of enterprise is that? Great job. Public company is the accurate answer. According to the illustrative financial structure, in S1 presentation of financial statements, where should dividends paid during the year should be disclosed? E. Correct. Statement of changes in equity is the right answer. The proportion of debt in the overall capital is also called dash. Clear logic. Your choice financial leverage is sound and 100% true. Which of the following would be the most appropriate source of funds for a new business that makes mobile phone accessories? Oh. You're right. Trade credit is the correct answer. Proposition I states that in a perfect capital market, the total value of a firm is equal to the market value of the dash generated by its assets. Correct response. Free cash flows is the most accurate answer. Which of the following stakeholders are least likely to be positively affected by increasing the proportion of debt in the capital structure? Or nice selection. Non-management employees is the correct and valid answer. Which of the following is least likely to affect the capital structure of Long Drive Trucking Company? Long Drive has moderate leverage today, Perfect. The payment of a stock dividend is the correct choice. It is essentially the preparation of a financial blueprint of an organization's future operations. Identify the related concept. Nice work. You chose financial planning and it is correct. According to Modigliani-Miller proposition I with taxes, what happens to the cost of capital as the debt-equity ratio increases? Smart pick. Decreases is the correct choice.
Which of the following appearing in the balance sheet generates tax advantage and hence affects the capital structure decision?
Great thinking. Long-term debt is the right choice.
It is an image of a curved dash.
Smart move. Weighted average cost of capital is an accurate answer. A theory which asserts that there is an optimal capital structure, or at least an optimal range of structures for every firm. Bravo. The contemporary approach is the answer. It is the combination of debt, preferred stock, and ordinary equity that the firm uses to finance the firm's assets. You got it? Your choice capital structure is right, which is not discount rate. Excellent. Beta is a brilliant choice. A financial manager makes a choice of the amount and source of capital based on how the choice will impact the dash. Good job. Your answer firm value works well here. States that firms trade off the tax benefits of debt financing against problems caused by potential bankruptcy. Right choice. Trade-off theory of leverage is the best answer. The mix of debt, preferred stocks, and common equity that a firm plans to maintain over time is called as dash. Exactly. Target capital structure makes sense and it is right choice. The relative proportions of debt, equity, and other securities that a firm has outstanding constitute its dash. Sharp thinking. Capital structure is the right choice. Which of the following is the name of the registered capital on the day of registration of the enterprise? Strong choice. Funds constitute funds form material is the right answer. Which of the following sources of capital should not be selected by a business if its fixed cost is high? Well picked. Debentures is the correct answer. This is the process of planning expenditures that generate cash flows expected to extend beyond 1 year. On track. Capital budgeting is the correct answer. Which one of the following states that the value of a firm is unrelated to the firm's capital structure? Excellent choice. M&M Proposition 1 is the right answer. Calculating the cost of capital based on the company's debt and equity position is a definition of dash. Well reasoned. Weighted average cost of capital is the correct choice. Which of the following factors does not affect the capital structure for Kiara, Rian, and Ashi? Correct response. Investment criteria is the most accurate answer. Which of the following cannot be registered capital on the day of establishment of the enterprise? Solid response. Labor is a valid choice. The longer the working capital cycle takes to complete, the dash working capital a firm will need. Nice selection. More is the correct and valid answer.
Refers to investor-supplied funds, debt, preferred shares, ordinary equity, and retained earnings.
Smart pick. Capital is the correct choice. This decision determines the overall cost of capital and the financial risk of the enterprise. Great job. Financing decision is the accurate answer, sir. If a company issues bonds worth 1,000 billion KIP, ask how the company will record the list. Nicely done. Docker Assets Liabilities is a solid answer. Refers to the use of debt to amplify returns from an investment or project. Excellent choice. Leverage is the right answer. When the result of company D/E ratio is greater than 1, it indicates. Good job. Your answer, a high risk level of company capital structure, works well here. This decision is about the quantum of finance to be raised from various long-term sources. Well picked. Financing decision is the correct answer. Under which of the following situations is a company unlikely to issue equity capital? Good thinking. All of the above is the right answer. Sufficient working capital is needed to prevent a business from becoming insolvent. You got it? Your choice true is right. What are the 3 key factors that sustain health in a non-profit organization? Right again. Mission, organizational capacity, and capital structure is a valid answer. What is the financial manager's objective in making capital structure decision? Well reasoned. Optimal capital structure is the correct choice. When more debt is added to capital structure, which of the following happens? Excellent. Cost of equity increases is a brilliant choice. The debt level that maximizes the firm's stock price is called as dash. Well done. Optimal capital structure is the right choice. Which of the following is an accounting record at capital formation? Strong choice. Doc Property CRA registered capital is the right answer. Investment cash flows are independent of financing choices in a dash. Clear logic. Your choice perfect capital market is sound and 100% true. The unleveled cost of capital refers to the cost of capital for a. Nice work. You chose all equity firm and it is correct. Which component of capital structure determines the financial risk? WIS. You're right. Debt is the correct answer. The Modigliani-Miller theorem, or the MM theory, is known for dash. Correct. Capital structure is the right answer. The proportion of debt in the overall capital is also called dash. Bravo! Financial leverage is the answer. What is the 1 reasons why capital structure change over time? Great thinking. Market actions is the right choice. The country risk premium is measured mainly considering. You chose the country's debt quality, and it is correct. Theory which does not agree with MM theory is called as dash. Sharp thinking. Trade-off theory is the right choice. What is the classification of working capital based on time? Perfect, permanent, and temporary is the correct choice. AIM model, irrelevance of capital structure is based on. Smart move, arbitrage process is an accurate answer. Is the cash a business has for its day-to-day spending? Right choice. Working capital is the best answer. Which is an example of an internal source of finance? Valid point. Owner's funds is true. MM in the theory of capital structure stands for dash. Exactly. Modigliani and Miller makes sense, and it is right choice. The traditional approach to value of the firm M that. On track. Value can be increased by judicious use of leverage is the correct answer. Which of the following can't be a capital structure? Well done. Preference shares only is the right choice. A company weighted average cost of capital includes. Great job. The company capital structure and cost of capital is the accurate answer.
The overall financial risk depends upon the
Correct response. Proportion of debt in the total capital is the most accurate answer. The term capital structure refers to dash. Bravo. Long-term debt, preferred stock, and common stock equity is the answer. The value of a firm is maximized when the... You're right. Weighted average cost of capital is minimized is the correct answer. When is financial leverage profitable? Good job. Your answer. When the company is growing exponentially works well here. Net working capital refers to smart move. Current assets, current liabilities is an accurate answer. What do theory of mum say? Right choice. Capital structure is irrelevant is the best answer. Financial risk is? Well picked. Dependent upon a company's capital structure is the correct answer. How you will get all these quiz questions in PDF books format. You chose contact Narayan Changda, and it is correct.